India.com. Sandeep, with regard to this entire defense pack, talk to us about, I mean, we're now a day's trade away from the budget. Uh, what do you sense in terms of what's in store for defense, and the kind of moves that we've seen have been very, very sharp over the last couple of days within that defense space? Also, HAL coming out saying they'll go into civil aviation. How do you see some of these moves?
Yeah, I think a defense pack initially a couple of years back or 2, 3 years back, we saw a move which was all encompassing. Anything to do with defense moved up. Then I think we saw a correction, and now we are at a phase where I think moves they are going to be selective. Now, HAL as a company has been an underachiever in terms of execution. So they have orders, but the execution has lagged behind, and the entire civil aviation thing is, I think, 4, 5 years away only. So I would be not so excited on HAL per se, but I believe that companies which have a strong execution cycle like Bharat Electronics, which also came out with good results, I think that could continue to do well. So I think we need to be careful where we are investing in defense also.
Sandip, how do you look at Tata Motors CV? They came out with their earnings yesterday. Numbers were pretty much in line. Some kind of commodity inflation hitting their margins as well.
Yeah, because commodity prices have moved up, some margin impact is there. But the good thing is that the companies, most of the company con calls which I've attended in the auto sector, they are indicating that they'll be able to pass it on because they need to increase prices by maybe 1% or 1.5% to take care of these commodity inflations, as it's not the entire basket which is moved up. Now the CV cycle is on an up cycle, and I think Tata Motors commercial vehicle lately it's done well, and the outlook continues to remain positive for the next 2 years as uh, we will see the replacement demand as well as fresh demand come in, and the subdued period which was there for CVs that could be getting over. How will the overall growth pan out is something we need to see because it will depend on economic activity also. So if the economic activity like the IIP growth last couple of months we've seen at 7.5 to 8%. If IIP growth continues to be in high single digits, then we could see high single digit or maybe low double digit growth also in the CV segment, and which will be positive for the companies in the sector. So overall outlook remains positive.
And Sandeep, from a value perspective, do some of these CV players actually look decent in terms of valuations? What are your favorites? How best would you play CV? Would you play through Auto Ank? Would you play through the regular OEMs like a Tata Motors CV? Would you play it through the financiers?
I think one way is to play through the financiers. Where also we've seen a rally. The now Ashok Leyland, obviously being the pure play CV play, has been the preferred one. But there, I think we've seen the move has been significant. It has not corrected with the markets at all, and it's in fact continued to move higher. So valuations are not really attractive in Ashok Leyland right now, although its performance should continue to be good. So I don't see a big correction there, but then at these valuations, fresh entry I wouldn't advise. But I think Tata Motors CV still could have more efficiency gains and potential improvements. So there, whenever markets are weak or there's some corrective move, I think that could be a better bet from a purely valuation standpoint. Although as a company, Ashok Leyland has done much better.
Right. Sandeep, how did you analyze ITC's numbers? Largely in line, but I was just looking at the segmental performance, be it cigarettes or FMCG, it was quite decent.
I think results were pretty decent. And on the cigarette side also, on the FMCG side also, which is more important for them in the context of whatever has happened on the duty side on the cigarettes. And the dividend announcement is also positive because it's almost 2% dividend yield on the current stock price. Most of the analysts are who were excessively bullish earlier now seem to be excessively bearish. But I think at these valuations, stock I think would be around 18 times next year earnings, which is not at all expensive for a established consumer company. So there is value buying opportunity here. There will be slight skepticism in the first 2-3 months of the new duties coming in as people will be watching for how the volumes play out. But I think it's not a stock which is going to run up, but it's a stock where we could potentially accumulate as a value buy with a return expectation of maybe 12-15%.
Sandeep, how do you look at Swiggy's performance? I was just checking in on the numbers. While the top line is okay, the loss, of course, has widened more than estimated. While the management is still maintaining that QCOM contribution margin break-even will happen in the first quarter of FY27.
I think it's a cash 22 for many of these companies. You slow down growth to improve. So either you slow down growth to improve your margins, or you continue to grow at a blistering pace and then make more and more losses. So if they slow down, then the question of how to value the company also because most of the analysts are very bullish because of the high growth. And if the growth moderates, then that's something to think about. And the most surprising thing is that they are themselves operating in such a competitive market, and then they are cribbing about the fact that the competitive intensity is so high. So, and I don't think the competitive intensity is going to go down because some of the players are now starting to become more aggressive, like Reliance or Amazon or Zepto. So I think this will remain a very competitive space. What the companies indicate about reducing losses is more about what they hope to do rather than what can actually be expected. It's very tough to invest in these companies, and the valuations, whatever many brokerages have 550 odd stock price targets. I don't know how they come out with those.
Okay, sure. And you've got some of the EMS companies also, the likes of a Dixon. Not a bad set of numbers, Sandeep, frankly, versus expectations, of course. Your opinion on those numbers and an opportunity for a budget kind of a trade just prior to budget would be a good time to buy.
I don't think budget can aid the growth of these companies in any way. So I think they have been given enough PLI benefits, etc. Now they're of their own. I don't see how the numbers were exciting because the growth was not there at all. And whatever growth in profits have come up, it's because of other income. And if you actually remove PLI benefits, my guess is that the company would not be making much profits at all. So I think even at these prices, the stock trades at 50, 60 times earnings. I don't think such companies deserve to trade at 50, 60 times earnings.
Sandeep, I think Dixon has also reduced its guidance with respect to the mobile phones, I think to 35 million phones for this year as compared to 40 to 45 million. And that's on the back of lower sales which is happening in Q3. Do you see valuation correcting for Dixon from here on?
See, there are two things. For the valuations to hold up, growth has to be there because without growth, the valuation of such companies which operate at wafer thin margins and bank on PLI benefits only is very tough. Now, as the PLI benefits for mobile phones wind down, we are seeing growth getting wound down there. So that also brings into question the entire PLI story because if companies are going to get into some segments where they get PLI benefits, then as the PLI benefits end, they move to some other segment where they are getting new PLI benefits. It really doesn't aid in long-term manufacturing capacity creation. So I think in some sectors we might see positive benefit due to PLI, but in many others we are going to see this kind of opportunistic moves which companies are going to do. And as such, we should not ascribe very high valuations to such companies.
Have an investment which is there of over $2 billion,
That's true.
which is not yielding any capital returns, which is issue. So, Sandeep, what's your take on some of the oil companies at this point in time? We're seeing crude inching up in the last 1 or 2 weeks. Brent above 65, nearly 70, and the WTI hitting $65.
We had actually taken some bet on ONGC around 7, 8 months back, but the stock was not moving at all because of the expectation that crude prices could be bottoming out. So I think it's bouncing back now. Now, the sustainability of crude oil price spike will depend on how the entire Iran saga plays out, of which it's very tough to predict. But I think because valuations are very cheap, we are seeing some reset on valuation. So other commodity stocks moved up, but the oil companies did not move up. So I think they are doing a catch up. So I would think that a potential move towards 300, 320 is something which is possible. But I think beyond that, we will depend purely on how the crude prices move because as a company, ONGC specifically is not a very efficient company in terms of like the production has been continuously declining only over the years. It's just a pure commodity price related play. So I think we would, I would like to play it till those levels, and if we get those, maybe exit.
I wonder, Sandeep, whether you've had a chance to look at the Paytm numbers. Largely, in fact, on the profitability front, at least it was slightly ahead of what the street was penciling in. But do you have a view?
Yeah, so I think they are going to take a hit because of the the payouts for whatever those are called the UPI payouts being removed and those benefits going out. Most of the profit is coming from the selling of financial products where they earn commissions out of that, and that's a very low PE business. So I don't think you can give a very high PE. So reported profits and how the profits come and the future outlooks. So there's nothing exciting per se about this company. So so I think I've seen target price of 17, 1800, but I don't know. I wouldn't be too bullish.
Okay, fair point. Seems like that trade on Paytm has